Should be live. So guys, thanks so much for joining me. And as we usually do at this time of the day, we're going to take a look at some of the main markets such as the euro, dollar, Bitcoin, crude oil, DAX 30, gold. And before we start, as always as well, please check out the risk disclaimer. There's a genuine risk that we'll lose all of our invested money. So please bear that in mind before you start trading. Okay, good. So let's just get going here. Sorry to keep you waiting. Okay, not much happening with the euro right now, and we just need to be patient and wait. The market, if you look here, it hasn't really done anything really since we started to reach these levels already on the 15th, which is Monday last week. Just need to wait for a break to the upside. If that happens, then I think the market could rally maybe up to 125 and 125.70. Traders as well, they are short. If you click up here on technical tools and you click on sentiment, you'll see that traders are actually net short the euro dollar, and that suggests to me even higher prices in the weeks ahead. You can see here in the euro, 63% of traders are short, whereas 37% of traders are long. And given the contrarian nature of that indicator, it does suggest higher prices. Now again, break to the upside. I think if we break 123.23, traders might look to go long here, potentially targeting 125, 125.70 with most likely stops below this level. The only time it doesn't make sense to go with breakouts is outside of London business hours. So obviously business hours are until 5 p.m. in London, 5:30. However though, maybe after 4 o'clock, it's very unlikely that a breakout is going to be successful, and especially if it's in the middle of the night, no breakouts really are interesting at that time. Why? Because the liquidity is low in the markets at that point of time. So you have a push to the upside, you get some stop loss orders triggered, but you don't actually see actual movement or follow through. So okay, break to 123.23 takes you higher. The alternative is that people are just gonna go and buy a dip. So what's a dip? Well, a dip is when we correct against the trend, right? Here you can see price creating higher and higher lows, and then we correct it against these lows, and then people buy at these pullbacks. As an example, the idea was here to buy in the beginning of the month, and we bought the dip. So how do we calculate those levels where people might be buying? We'll take a Fibonacci from the trend defining level, which is the low, which everybody most likely has their stop loss just below it, to pull it to the high, and then we get these three levels. And because prices spend quite a lot of time here, I do think that if we push below here, that is going to correct, and it might go down to the 120.80 level or 120.68, which is really the third Fibonacci level. So there's usually 3 Fib levels that people watch, and I'm targeting the third. What else? You also have the high here from January 4th, which is a resistance level, which most likely will now turn into support. So these two overlapping here makes sense to buy here as well from these levels. The risk is about 150, 160 pip, and then if we move to the upside, we can potentially make 250. So the risk reward ratio as well is good down here. Here is Bitcoin, and Bitcoin is under pressure. And you might remember we said this could probably break a little bit to the upside, but I wanted to see how the market was going to develop here. You might also remember that I said a few days ago, or actually already yesterday I think, that this was a trend defining level here at 14,574. Now this has, we can clearly reduce this level now because we can clearly see that this is the high that people are focusing on, right? So some people, they're going to be drawing these trend lines. I personally just like to focus on the highs, and obviously it takes a bit of judgment to kind of figure out which highs are important or not. So I'm focusing on this level right now, and as long as trade below this level, this market can go up to maybe 11,800, but then most likely try to target these lows. And if we take out this low, which is 8,985, then it usually opens up for a steeper decline, which is down here to the next level, which is a level from the 20th of November at 77.66, and then maybe all the way down to 5,630. Even though I personally think that is quite unlikely, such a decline would be a decline of 70%, which is quite rich for Bitcoin. It used to decline like this in the beginning when it was not as mainstream. Like nowadays, if you get a 30% decline, then people try to buy that. So far, the market has moved down with about 50, which I think is within reason, but I don't necessarily think we're gonna move all the way down here. So what's the game plan here then? Well, as I said, over the last few days, you do have some people that are buying on these dips. 20% of the portfolio. It's not a big deal. Why? Because if the market declines with another 50%, you only lost 10% of your total portfolio, and you can maybe build at low levels. What I think is better though is maybe buy some and then just wait for the end of this downtrend, because we never know. These markets are very elevated and they're very bullish, and at one point they might come back. And might come back. I mean, they started at, I'm not sure if this started at 0, but it was trading at 1,000 about this time last year. So who knows? Maybe we'll have a steeper correction. So we need to be very careful. So the idea here, for me at least, is that I'm going to turn bullish when we stop creating these highs. Take out 13,086, then this market can go up to maybe 15,000, and then probably down again, and then potentially higher. So I'm just watching this high for now and just sitting on my hands doing nothing. Here's crude. It's like the euro moved up to these highs. This high was created on the 15th, which is Monday last week as well. Since then, not much has happened. Take out the high, which is 64.89. This market can go to the upside, and the alternative is to just buy a dip. Obviously, the market does not want to correct too much, so maybe we'll take out the high, and that's going to be it. But I am bullish, just want to wait for that move. And it's a little bit like we were dealing with here in November and December. You might remember, I mean, on the way up I was bullish, and then down here in November, December, the market started to become boring. I was bullish one day, I got stopped out. I was bearish one day, I got stopped out. So when you're not making money either being long or short, that's indication that you are in a range bound market. And then we just said, let's take it easy. And I said, when and if we break 58.62, we turn bullish again. And the same situation here. All these markets, sometimes they need a break. Bitcoin needs a break. The euro needs a break. Crude oil needs a break. And we just need to wait and accept these situation. And then when the market starts to trend again, we'll look to get involved. So again, no change to the outlook. Bullish on the break to the upside, or bullish from the lows here. From this corrective move here, and I'll be bullish as long as above 61. Here is gold, and the idea with gold was very straightforward. The idea was just to buy from 1,325. It's going to our advantage. It could go a little bit higher, maybe to 13,042, but this is a high from September last year, and this level up here is a 2016 high, and these two levels are very important levels. I mean, this whole area worked as resistance as well here in 2014. So yeah, take out this high here from 2016, and there's nothing really stopping price. Maybe rallying all the way up to this high here. But because this has limit price, if we don't break out today or tomorrow or in the next month or two, it wouldn't surprise me. If we're trading in the middle of the range again, it wouldn't surprise me. So here, I think we can maybe ride this a little bit more to the high. If we're lucky, maybe a little bit higher. But because of all these resistance levels, I think traders are probably booking profits up here. And then what they do is that they put entry orders to go along on the other side of this range. Finally, this is the DAX, and the DAX is has changed this trend right now, or the way it was operating. So it was trading sideways for a long time, and moved up, moved down, took out the high, and I was looking for a correction. That never happened. Instead, the market just rallied to the upside, and I think this market could easily head higher. We took out this high, And it's difficult for me to kind of figure out exactly how much higher we can go, but this, from this high to this low, is 294 points. So we add that, then we end up somewhere up here. So the difference between this high and this level is the same as the difference from this high and this low. And obviously if it's a bullish trend, we'll take that out and the market just heads to the upside. Okay, so what we're looking at here is we're looking for a corrective move, ideally, even though I know you guys that trade the DAX, you know that this market, when it goes, it doesn't want to come back. So I'm not sure, really. I mean, I'm sure that I don't want to buy here, I can tell you that. And if we're lucky, we'll have some sort of correction. So a little bit like I showed you with the euro, we take a fib. This is your first fib, this is your 50 fib correction, and this is the prior high. So around these levels, I'm happy to turn bullish, and maybe we'll move to the upside like that. All right. Here, buying here again gives us pretty much the same risk as the potential reward. Of course, if it's a genuine uptrend, it's just going to go a little bit lower, and it's not actually going to touch this level here. Remember as well, January, February, March, all up until May is the time to buy stocks. Then after that, summertime comes, it turns really boring. Then comes October, September, and these the months in the fall, the market tends to soften at that time. So this is my outlook for the DAX. I'm definitely bullish. The question is, where should we buy where we can obtain a good risk reward ratio? I think we can move up to this high as well, at 13,725. Okay guys, I think we did a little bit longer than we should have, but that's fine. Let's see who's with us in the live trading room. And here's the tool, by the way, the sentiment tool. Don't forget to check that out. And if you're new to this, don't forget that we do this Monday to Friday at 9 a.m. London time. And if you like it, don't forget to like us on YouTube. Don't forget to share our videos, and so on and so on. Why? Because the more people come and the more busy it is, the more energy are we going to give it to. Very straightforward. It's like following the trend. And some of you guys know me, I love to follow the trend. And if there's no trend, we need to take a step back. Good morning, hi. How you doing? Good to see you here. So I got a question. What do I think about the net short positions in the Aussie dollar yen and the euro yen? Yes, so the Aussie dollar yen and euro yen short positions, I think we want to work with that, because you see the yen positions in general. I mean, the Aussie dollar yen, you should know, because you've been doing this for some time. It's like a proxy for stock markets. So when we see growth around the world, which we're seeing right now, we tend to see the yen softening, and all these other commodities or coins, like, say, not coins, but currencies like the Aussie, the euro, the pound, they tend to gain. So I do think we want to play with that and work with this momentum here. So you can see how 91% of people are short the euro yen and short the Aussie dollar. As well, you can see here that in the case of the dollar yen, it's actually 50-50, which is interesting. So we're starting to see a bit of a shift here in this market. So you need to keep an eye on the dollar yen. But in general, if I show you, like, I think in regards to, say, the Aussie dollar yen, it's moving down quite big today on the 4-hour, but maybe a break to this high here, which is the 89.10 level, can work. Of course, if you want to capture a dip, then maybe this is starting to become interesting. Obviously, it has quite a lot of negative momentum right now. It's down 50%. Maybe it'll come a little bit lower. So if you want to work with that momentum, then maybe something like this. And then you have the euro yen, which is something I've been bullish on for some time. And the euro yen here as well, you can see it's a nice uptrend. You got a low at 29.42, followed by another low here at 131.20, and then you got another low here at 133. And here as well, from pretty much 134.34. I think traders could potentially look to add. The alternative is a break to the upside. So that's the way to use these sentiment. And something, I mean, was also brought my attention to it more again after kind of not using it for quite some time, is that I actually met up, well, I didn't actually meet him face to face, but I saw the results of this guy that used to work for this company I used to work for many years ago. And this guy has been using sentiment for the last few years, and he has about 6 years of audited track record. And over these 6 years, he trades against sentiment, and he had made returns of about 660% over that period. He had drawdowns, of course, but it worked out fine for him. And then I met another guy, another guy I actually met as well from the same company as well. He used Forex sentiment, and he manages a fund NFA registered in the US. And here as well, he uses the sentiment, and he had about, I think, 1.5, if not up to 2 years of track record. And again, a nice profitable trading, which is much better than you'll see from the average Forex trader. So that brought me back to the sentiment indicator, and I understand a little bit better now how I can leverage on this, which is again useful the bigger picture, maybe use even the daily chart, because the sentiment doesn't work like, doesn't tell you what's going to happen in the next half hour or so, but it does explain, at least if you're in the right trend, and many times, if people are short and aggressively short, you want to be long and buy, and when they're aggressive buyers, you actually want to be a seller. Okay, I think we're going to wrap things up, and I think we actually have a bit of a record today in the number of people actually joining me today, so I'm really thankful for this, and I hope to see you guys tomorrow. Now let's just see here if there's any quick news here or any quick question. Is that report on the internet? Yes, so if you want sentiment, the sentiment, you can just check out on the tools. So that report, that because these two guys, they're not allowed to directly market to retail traders. They don't actually, that's not published online. It's not a report, it's actually just his trading results. So he manages the money for a few high net worth individuals. Okay, so here's a question here from Macintosh. Any thoughts on the CME futures price expiry effect on the price of Bitcoin? Thanks. So, to be honest, I'm not the man on futures expiries, but what I know from futures expiries in say things like crude oil, then it actually doesn't necessarily matter too much, because what happens is that you have a contract, and when it's about to end, people just shift from one contract to another, and I guess there are some sort of plays on when to shift from one contract to another to kind of take most advantage of the move. But there's not like, there's probably some on a micro level, there's things you can probably work out in efficiencies there, but from a big picture perspective, the fact that one future contract expires doesn't actually matter, because as soon as that one expires, you'll have a new contract. There's already a contract in play that people can trade, so people just shift over from one to another. Of course, people that don't shift out, they will be forced to take any gains or losses on whatever on the contract they were holding, right? Whereas people that shift out, they actively decide to close themselves out, and what happens here is that they if they're in a profit, they're in a profit, and if they're in a loss, there's in a loss. So from that perspective, I don't think it actually matters. Okay guys, thank you so much for joining me, and I'll see you guys tomorrow at 9 a.m. here at the live trading room at tradekaplan.com. Have a good day, and thanks so much for joining me. Thank you.